Today we'll start with the types of these stocks. Abhi, see what happens when we say that we want to invest into stocks. So it is not that simple actually. Let's say somebody comes to me and asks me that, okay, I want to make investments into stock market. Can you tell me some stocks, right? So for this, even though this question is very simple, but then again, the answer to this question is not that simple. Reason being, different types of companies have different nature. With regard to, by nature, I mean with regard to risk and return. Okay. So I need to understand that what are the different types of stocks, or we can say how exactly we can classify these stocks. Okay. So there are three types of companies in the market. Three types of companies in the market. One is large cap, another one is mid cap, and the third one is small cap. Now, if any one of you have read the definition of any of these, can you please try to write that down in the chat window, that what type of companies are classified as large cap companies? Which type of a company will be called a large cap company? Take 10 seconds to write your answer in the chat window. Which type of companies will be classified as, or are classified as, large cap companies? Write your answers. Take 10 seconds and then write your answers in the chat window. Anyone? I hope I'm audible to everybody. Okay, let me ask another question, a preliminary question to this question. What do we mean by cap in this? Or can anybody tell me what do we mean by market cap when we talk about companies? What do we mean by market cap? Okay, capitalization or capital of stocks. All right, anybody else would like to give it a try? Capital. Okay, anybody else? Give it a try. I've just received only 2 replies so far. There are 17 of you. Total market of outstanding stocks. I think you have missed a word in your definition. Okay, this is a good answer. Total value of companies' shares of stock. The most recent market value of a company's outstanding share. Yes. Now this is fine. See, by market cap we mean what is the capital value of the company in the market. Okay. Total worth of company according to stocks. Very good. So by market cap we mean that what is the let's say if I want to purchase a particular company which is listed on stock exchange. Okay, try and understand it in this way. If I want to purchase a company which is listed on a stock exchange through the stock exchange directly, and then there are no limitations with regard to how many number of shares I can purchase from the stock market. Okay, then in that case, to buy 100% of the shares of the company, how much amount of money I am required to pay? That is called the market cap of the company. By market cap, we mean market capitalization. By market capitalization, we mean that what is the total value or total worth of the complete outstanding shares of the company in the stock market. Let's say, so let me give you the formula. The formula is, I'm writing it in the chat window. You can note it down. Market cap is equals to total number of outstanding shares multiplied by market price of share. Okay, this is the formula to calculate the market cap. That is the total number of outstanding shares of the company in the market. That is how many, whatever number of shares are floating in the market, okay, which are being bought and sold by various people, right? And the market price of the share at this very moment. All right. So let's say I have a company ABC Limited. Now this company has 1,000 shares in the market, outstanding shares in the market, and the value of one share is 100 rupees. So I will multiply 1,000 with 100. I will get the answer as 1 lakh. So I will say that the market cap of this company is 1 lakh rupees. I will be required to pay 1 lakh rupees to become 100% owner of this company by purchasing the shares of the company, right? Now, on the basis of the market cap, the companies are divided into 3 categories: large cap, mid cap, and small cap. Okay. Now, for your understanding purpose and for your knowledge as well, the earlier definition. So whenever you will be referring to any book which is not of current edition, that is which is you can say later than the 2018, which is previous, which was published previous to 2018. So any of those books which will be mentioning the definition, which will be giving a definition for market capitalization, these books will be giving you a definition that a company which is having a market cap of 20,000 crore will be 20,000 crore and above will be called a large cap company. Another book will say that a company which is having a market cap of more than 10,000 crore will be called a large cap company. So there was no standardization, and every other analyst had a different view with regard to what type of a company, that is with regard to the market cap, what type of company will be called a large cap company or a mid cap company or a small cap company. Okay. Now the definition has changed. SEBI is the regulator of the Indian capital market, and SEBI has said that on the basis of the market cap rankings, we will identify the companies as large cap, mid cap, and small cap. Okay, I am repeating, on the basis of the rankings of the companies which are calculated which are calculated on the basis of the market cap of the company, right? Rankings given on the basis of the market cap of the company will help us decide or come to the conclusion that what type of a company will be called large cap, then mid cap, and then maybe small cap. Okay. Now, the definition says that, the updated definition says that, you can note it down as well as it is there in the slide also. All the companies which are listed, these companies will be their market cap will be calculated on a 6 month basis, every 6 month basis. All right, just give me a second, guys. Yeah, so every single company will be calculated, the market cap of the companies will be calculated, and on the basis of the market cap, these companies will be ranked. So the top 100 companies, okay, the top 100 companies on the basis of these rankings will be called large cap company. From 101st to 250th rank company will be called a mid cap company, and from 251st and onwards, the company will be called a small cap company. Now, this is the current definition. Okay, so if in an interview, if you'll be sitting for any sort of interview wherein such sort of question is asked, you're supposed to give definition on the basis of the current definition, which is this. Okay, and then parallelly you have to tell the formula for calculating the market cap, that is total number of outstanding shares multiplied by the market price of a share, of the share of the company. That is the current market price of the share. Okay, so let's say if I want to calculate the market cap of the company at this very moment, so I will also again take out the current market price of that company at this very moment, and then we'll multiply it with the outstanding shares of the company. Okay, now I hope it is clear to everybody. Now, okay, let's not go ahead. We still have a lot of things to discuss about these. So why the companies are classified into these three criteria in these three classes? That is the question here. So the reason is the reason is that the companies, on the basis of their market cap, they have different profiles with respect to risk and return. So if I'm saying, if I have to compare a large cap company with a mid cap company, I will say that a large cap company, if I'm going to invest into a stock of a large cap company and I'm going to invest into stock of a mid cap company, so by purchasing the share of a large cap company, I will be taking lesser risk, and by purchasing the share of a mid cap company, I will be taking higher risk. Okay, and vice versa, we can say, or on the other side, we can say that if I'm going to invest into a large cap company, I will be getting lesser return as compared to if I am investing in a mid cap company. Okay, that is the thing here. Now, what happens? Mid cap company, why and similarly, the highest risk is in case of a small cap company. Then there is a moderate risk in case of a mid cap company, and then there is least risk in case of a large cap company. And again, since risk and return are inversely proportional to each other, indirectly proportional related to each other. So the higher the directly proportional to each other, the higher the risk, the higher the return. So if you are going to invest into let's say a large cap company, you will be getting lesser return as compared to a mid cap company. Simple. Now why am I saying that a large cap company is will be giving you a lesser return as compared to a mid cap company? Now the question arises, or maybe a small cap company. The thing is that the reason is that, see, a large cap company is that company which has a huge market share with regard to its product. Okay. For example, Dabur India Limited, Hamdard, then HUL, then not Patanjali, but still, these three companies can be compared. So these companies have a high market share, very, very high market share. The Nestle, again, these companies are very well established in the market. They have their dedicated customer base who are loyal to these companies and will be preferring their products if given the choice. If the product of, let's say, if there is a customer, a loyal customer of Dabur, and we have two products in the shelf, that is, one is the Dabur Chyawanprash, and then there is again a Chyawanprash from Hamdard or maybe any other company. So the loyal customer will always pick up the Dabur Chyawanprash in that case. Okay. Now, these companies in this way have already established themselves in the market. Now, whatever happens, doesn't matter what happens in the market, doesn't matter what happens in the economy, since these companies are already established in the market, their market share will get impacted lesser as compared to other companies. So the small players will face higher impact with regard to their revenue generation, and the bigger players will get less impacted. Their market share is very big, their management of the company is very strong, their employees are again stable in the company, their HR policies are also very strong. The placement of the brand in the market itself is very high. The placement of the product in the complete competitive sphere is again very stable and very strong. So the products of these companies cannot be replaced easily until unless a market disruptor comes in, just like Patanjali. So Patanjali, it just entered into the market. It started disrupting the market for all of these types of companies. And then it created a space for itself by very aggressive marketing strategies. Okay. But then still on the other side, the market share is still there. So large cap companies are the most stable companies as compared to mid cap and small cap. Small cap companies are those which have just started, which are hardly 1 year, 2 year, 4 year, 5 years young. Okay. Now, these companies, if there is any economic up and down, so the impact which these companies, that is the small cap companies, will be facing will be way higher as compared to the large cap companies. So which is why we are saying that if the market is very bad, so the impact of that bad market will be least, as well as it will be faced last by the large cap companies, and it will be maximum and it will be faced first by the small cap companies, and then the mid cap companies will come in between both of these. Okay. So if I'm going to invest into a small cap company, and also vice versa, if the market is very good, so these small cap companies will have excellent opportunities available in the market. And because of that, these companies will grow at a higher pace as compared to the large cap companies or mid cap companies, or maybe mid cap companies as compared to the large cap companies. Reason being, these companies have just entered in the market.
these are new companies which have exploited a particular gap in the industry. For example, Ola, Uber, Zomato, right? Flipkart, then you can say Paytm. All of these types of companies were the ones which brought in some new ideas in the industry. There was nothing in the market with regard to such types of products which these companies started offering. So these companies had a huge market available. Depending upon the amount of money available in their accounts, that is the funds which are there available with them, these companies could grow proportionately. Okay, so the better the funds availability, the faster, the quicker will be the pace of these companies to grow in the market, right? So that is the thing. But on the other side, since these companies are expanding, small cap companies and mid cap companies, these are expanding rapidly, these are aggressively spending. So these are again spending aggressively over all of their activities, especially the marketing activities, which is why they have lesser funds available in their, you can say, in their accounts for any emergency situations, right? So this is the whole story why we are categorizing the stocks in three categories, that is large cap, mid cap, and small cap. Okay.